Going on with the OPEC and the crude oil market, OPEC put off until later this week a decision about whether to extend oil output cuts, rolling the decision into Thursday when the cartel plans to meet with Russian-led producers. OPEC had planned to be able to reach consensus inside a cartel on Monday, but held off on endorsing a deal amid still lingering differences between Persian Gulf producers such as Saudi Arabia and the United Arab Emirates and Russia over past lack of compliance with earlier cuts, according to people familiar with the debate. A key hurdle to APEC remains how to deal with past non-compliance by some countries. Saudi Arabia, the UAE, and others in OPEC insist that overproducers, including Russia, Iraq, and Nigeria, cut their output more in the first quarter to make up the difference, according to the delegates. So this is pretty interesting situation. Let me bring to the show my next guest this morning, Youssef Al-Shamari, CEO of CMarkits. Good morning, Youssef. Thank you so much for joining us.
Hello, Alexandra. Good morning.
I was wondering, do you believe that these issues, specifically the non-compliance issues, are going to be dealt with?
Pretty much yes, but certainly I think the hard language that we have seen over the past couple of days just suggests to you how serious it is. And some countries are kind of doubtful of if other countries will actually achieve the targets that they have pledged, and seems that some members are actually unsatisfied with the performance of key members. And let me be clear about that. In fact, we have about 2.34 million barrels of oversupply, and about half of that comes actually from Russia and Iraq. So it depends actually on how fast these two members and other members actually will contribute to meeting their pledges before OPEC decides on making the extension. Yet, eventually, I think the members, especially within the OPEC group, they are already on the verge of striking a deal, and I think eventually they will agree on an extension. And as you can see, prices are already reacting very positively despite this ongoing uncertainty over the past couple of days.
Yeah, absolutely. And then we have a pretty positive news when it comes to the vaccines, both from Moderna, Pfizer, and BioNTech, because they both ask vaccine authorizations, both in Europe and the United States. So this is pretty positive. How do you see the tussle around the supply and demand in case of vaccine in let's say mid-January 2021?
Well, our forecast for the vaccine has been quite clear since for a month ago, and the delivery of the vaccine will take time. And what currently affecting the market is kind of a sustained optimism over the demand coming up next year. So despite the vaccines are not readily available effectively, but they are expected to be available end of December and beginning of 2021, yet they are not expected to lead to a significant demand growth until 2021, the mid of 2021 next year. So we're expecting a growth of about 2 to 3 million barrels above the current level, and that's mainly due to enhanced flying activity, reduced lockdown measures, especially in Europe and the United States. But I think we need a bit over 6 months until we see that kind of an effect. And that's why OPEC Plus extension is quite important until we see that kind of effect. Yet, I think optimism is currently dominating the markets, and that's the current reason of the price recovery.
We can say that it's been a November to remember, both for equity markets and energy sector, that's for sure. At the same time, ExxonMobil is retreating from a plan to increase spending to boost its oil and gas production by 2025 and preparing to slash the book value of its assets by up to $20 billion as the struggling company reassesses its next decade. But let me tell you that Exxon is just a simple example. How do you see the oil majors in 2021? Do you believe that they're going to do better in terms of fundamentals?
Well, I do expect a better performance, financially speaking, compared to Q1 and even Q2 2020. And that's already happening due to the price recovery. We've seen now Brent trading almost close to 48, between 48 and $49. So, and we've seen also the recovery in the stocks of major oil companies. So I do expect a better performance, yet the fundamentals will not actually change much until we see kind of a greater impact of the distribution and the availability of the vaccines on a larger scale. So we can expect kind of higher prices, but not really larger volumes being sold from oil companies.
Well, that's pretty important. Which are the risks that are going to remain for the energy sector apart from the COVID-19, of course, which is a totally risk for each and every sector and market?
Well, I think currently we're having an unthought of risk, which is the cohesion of OPEC+. I think apart from COVID-19, which is not over yet, and I don't think it will be permanently eliminated with the vaccines next year. I think it will last for a couple of more years until we see how this pandemic will go. Yet I think OPEC+ will need to maintain coherence. And this is extremely important. We don't want to see members, everybody producing at the maximum capacity due to an agreement over the cuts currently in the markets. So that's one important factor. The second factor is demand levels. Consumer behavior is quite important, and we need to see if consumers will come back at the same consumption appetite that has been happening actually before the pandemic. So these are, in my view, the most important factors that the market will be watching over the next year.
And are you optimistic in regards to the OPEC integrity, since it's really important?
Until this stage, yes, I am optimistic, and I think they will find a deal because OPEC has always come across these issues. They are not new in the OPEC history, and they have dealt with it for over the past years, especially even when the alliance has been formed 4 years ago in 2016. Yet I do think that members will need to enhance compliance in order for that these issues do not actually escalate and then can bring kind of an oversupply in the markets.
Well, let me ask you one final question. What about a China factor?
Well, China is already doing very well in terms of its economy. We've seen the Chinese PMI, the manufacturing PMI is about 52. The non-manufacturing PMI is about 50, almost 56, and it's actually much higher than the pre-COVID PMI levels. So I'm not very much worried about China, yet I think we need to see a better economic performance in the United States, in Europe, and even in India.
All right, thank you very much. Youssef Al-Shamari, CEO of CMarkits. Thank you so much for joining us. Have a great day.
Always a pleasure.
Well, before